Very good morning, everyone. It's a return to Capital Club with an almost full house. We had to kick out, not joking, 150 people out to give you a spot for a topic which I'm very passionate about, and a couple of tax colleagues in the room as well. And it's a good time to talk about economic substance regulation. Last time we were here, for those of you that were in the house, it was to launch the UAE foundation regime, and it was a packed house too, and out of that we became the largest administrator of foundation in the Middle East. And that was for something that is of use, but that was not mandatory. So brace yourself, because this will be of use and is mandatory, whoever you are as a company. So what do we try to achieve today? One, we'll try to explain you where this law comes from, why in the UAE, and why today. I'll try to touch a little bit on what obligation it creates on companies here and who it really targets. Thank you. And because it's an MHQ program, you are used to practical examples. So we will give you practical example. I see that you want one, particularly evolutive. So you will have that too. And we'll finish with telling you the recipe. What should you do next? Call Peter Wilson, or come and see us, or whoever it is in the room. But more importantly, get ready. It can be interactive, doesn't have to be. I'm very good at enjoying myself speak alone. But if you have questions, feel free. You can ask, feel free to interrupt me. I don't have no problem with that. There'll be a Q&A at the end. And if you are too shy, you can always come to me or to another member of the team later on. Last but not least, there is a law, there is a guidance, but we do not have all the answers today. But we'll try to give you a couple of nuggets of what we at MHQ feel this law impacts you with, or where it is getting, yeah? Okay. So where does it come from? It all starts with the European Union, the nasty European Union, which at some stage decided that everyone needs to be equal. We are all communists after all, are we not? So what they did is say, look, the world is uneven. Clearly, some people are playing by different rules. These are the low and no tax jurisdiction. So we need to create some sort of framework to push these guys to apply the same rules that we are, so that the rules of the engagement are even. And that's what they did by creating these BEPS policies, and in fine, by shaming people, putting them on a blacklist, saying, these are the people that abide by other rules, don't do business with them, don't lend them money, etc. Now the UAE ended up on that list as a result of having effectively no corporate tax in this country. No problem. Does it impact us really, day to day? No. Short term, no issues. Long term, big issues. You try to create a financial center, you try to be the #1 structuring hub in the world. If you are blacklisted, it's not exactly good for business. So something had to be done, and the UAE acted by, like other people in that list, implementing so-called economic substance regulation that, if they are followed by, demonstrates that the UAE says, okay, we play by the rule within our region, we will be compliant, we want our companies to be compliant. So what does the new law say? But really what it targets is specific type of companies undertaking a specific type of activities, and I will come to that. And in doing so, these entities need to have some sort of substance test in the jurisdiction, which will help you define later on, by ticking 3 boxes. They need to be directed and managed in the UAE. What the hell does that mean? They need to have an infrastructure in place, whether premises, people, etc. And for those that actually are generating income, they need to demonstrate that what led to this income, the so-called core income generating activities, are deployed in the country. So if you tick all these 3 boxes, then you should be all good, right? So that's fine. So who are we focusing on here? Who are we really looking after? Well, the law is much broader than people imagine, because while it targets a specific audience, it has an impact on all entities registered in this country, everyone. And please stop taking pictures. I'm very happy to give my slides to everyone, even competitors. No problem. So it's any entities that is here. It can be a sole establishment. It can be a dematerialized structure like an SPV, an IBC, etc. It's all encompassing for these entities. The trick is one needs to generate income from one of these 9 so-called relevant activities. Do you know what they are? No, I didn't either before I started to read. So let me help you and save you some time. These are the 9 activities. And if you look at them, I see a lot of people from the finance industry, they'll be familiar with the top 4. Imagine a BVI fund with a BVI asset manager and perhaps some other firm that operates out of London, which is controlling everything. This is exactly what these laws are to prevent for. So in the UAE, not really relevant. These 4, I feel like, there will be cases, but because it is so difficult to get licenses here in the finance industry, this is not the core of the issue here in the UAE. Intellectual property has been the black beast of most tax authorities for years, because there is a lot of people that actually attempt to aggressively extract benefits out of IP, to say it nicely. So in IP, if your company is licensing them, be aware, because you are presumed to be non-compliant until you actually demonstrate to the government that you are. So it's very tricky. But the most of it, the bulk of what we are talking about here is operating activities and headquarters and holding companies. And even passive companies can fall under the law. So it's quite interesting, and we'll go into an example later. Shipping business as well, and then the ever all-encompassing, it looks like it, trade and services. So is that everyone? Almost, but it depends on who your client is, and we'll come to that. So what does it mean? Directed and managed in the UAE. Well, the guidance is out, so it gives us already a rather clear picture of what that means. What it means is at least 1 board meeting per year. I actually don't think it's enough. I would realistically recommend that people go for at least 3 or 4, but it will depend on the activity required by the company. But this is the minimum that the guidance set. The composition and competence of the board is paramount. So if you try to demonstrate substance by having 2 secretaries you pick up from the street, I don't think this will work. And in fact, we at MHQ maintain both an internal list of competent directors and an external list of people, like my good friend Peter Litvin here, that provide the service of non-executive director of a high level of competence. And this is what people will be seeking going forward. They will need these sort of people. And of course, you need to minute that properly. How many companies in the UAE are diligently recording minutes of meetings? Very few, as far as I know. This is a necessity today to be able to evidence to the government that you are actually doing what you claim you're doing. Otherwise, you'll be fined. No one wants to be fined. You need to have proper infrastructure. That means proper employees. That means proper premises and some physical assets lying around. Now this adequate will depend on the level of turnover in your company. Imagine your company having 1 million turnover or 100 million turnover. The adequate level of expenditures to cover that turnover will of course differ and be adapted. So you are in for long nights with your accountants to tell you how much is too much and how much is not enough. And that's something that will hopefully, guideline will provide ballpark figures. Until then, it's pretty much assume and follow guidance of your advisor, typically tax advisors or people that do transfer pricing, because they will be able to help you on that. Again, importance to maintain records. And this is the same for SIGA. So if you deploy an activity and an income, you need to have this activity undertaken here. And what does that mean? Is that the relevant activity that falls under the law, this you need to do properly. Now, a company may have different type of activities, some of which will fall under the law, others will not. Only those that fall under the law will need to have this SIGA test. And I'll show you an example in 2 minutes. So the law was implemented. What was there before? Not much. And that was interesting because there was no formal economic substance law. That means there was no uniform need for substance in this country. But sometimes, just sometimes, substance was required. Think when you go and open a bank account. The banks today ask you for a real office. They ask you for a resident director. Think when you need a tax resident certificate. You need to establish a higher degree of substance. But it was just left, right, and on some occasion in the center. Right now, this is completely different, and we have a leveled field because of the economic substance law. So if you are in one of these activities, then you must have a decent number of substance. It uniformizes the need irrespective of the jurisdiction. So think various free zones. All of a sudden, it's not per the free zone. It's not per the bank. It's per a federal law. It's fascinating how this is going to get federal and has an impact on the registrars and everyone. And really what you have, and that's the first takeaway for you, is a formalization of a process whereby people need to say, I'm under the law or I'm out of the law. But even if you're out of the law, you need to file annually from Q1 2020, every company. So these are the dates, but I'm already tired, so I just want you to focus on two. Here they are, 30th of April, 2019. That's a long time ago, 8 days after my wife's birthday. And that means that that's the moment you had to abide by the law. Did you? Were you even aware that the law went back to 30th of April? Now you do. So whatever you do, you need to check your position from that date onwards. That means probably some opportunity for remediation. And the second one is January 2020. Yes, I know the expo is coming, but this is equally big for Dubai economy, I tell you, because from Q1, you will have to file whether you are in or out. So I want to give you a couple of examples. Let's have a test of how good we are at qualifying a company or not. So this is a commercial brokerage. It is rendering services. It is generating income from business primarily outside of the UAE. And the key here is that they are dealing with companies that are not connected to them. So it's only at arm's length through third parties. Yeah? So it's not intra-group. So how does it work? How do they qualify? Is this a company? Is this a UAE company? Easy, huh? Yes. Good. Does the company generate income? Yes, we agree. Fantastic. Now, does the income provide from the relevant activities? Commercial brokerage, service, remember the 9? You here, bottom left, is it? Yes. Yes? Haha, you're right, but you're wrong. You see, yes, it is a service, but the service only qualified if it's with a connected party. So only if you provide services to a connected party, intra-group, then you need to have economic substance in place and you fall under the scope of the law. In this case, our read is that you do not. That doesn't mean you should not have minutes of meetings, have proper accounting, etc. But that means that vis-a-vis the law, you have less things to do. The same for a shipping company. Anyone runs a shipping company? You can get free advice this morning. So you have this shipping company. Goods never enter into the UAE. And they are dealing with all sorts of clients that are not directly owned or controlled by the company. That matters. Now, UAE company, yes, we agree. Huh? Does it company generate income? Yes, it does. Good. Now, is it one of these 9 activities? Someone has good eyesight, you see shipping business down, yes? Now, does it matter whether you are a connected party or not with this business? It doesn't. So here, irrespective of your client, you actually, if you do shipping business, you do income, you're a UE company, you're in. No doubt. That means that you need to pass the economic substance test. These were just two snapshots of activities. Now, what I want to demonstrate here is that your circumstances will be changing. And I'm watching you because I know your will too. You will see. So if we look at a holding company, it doesn't look very menacing, does it? You have a company that just sets up a business, takes participation in a couple of startups regionally, and generates no income. So seems quite easy, yeah? So is it a company in the UAE? Yes, good. Does the company generate income? Not yet, because there's no dividend paid, it doesn't have a convertible loan, it's just a straight investment. Okay, so no. And as a result of that, then there's no income, so we don't care about the activity anyway. No income for year one, out of scope. Easy? Good. Now, the purpose of an investment is not that you do not make money. It's eventually that you generate income, yeah? And that's what will happen to this company during the second year. So in the second year, all of a sudden you generate income. What do you do then? You're still a UAE company, but then you generate income. So then we need to look at the relevant activity. Holding activity, is it here somewhere? Yes, it's here. Huh? So you are one of these activities. So sorry to tell you, you are a passive company. The only thing you've done is investing money. You generate a little bit out of it, boom, you need economic substance. Now the good news is, you need to pass the test, but it is actually a reduced substance test. Because as a result of the holding at this level being only equity, you need a properly managed company, you need an infrastructure, but you do not need to carry out SIGA internally because it's really passive. So that's a good news. So you need a little bit less than your standard service company. Now let's make it a little bit tougher. The same company, business is going good, they get out of the business. In the meantime, they have bought real estate, sold the real estate, and all of a sudden they sit on a big pile of cash. So they go to Oliver Hansing and say, manage that for me, 7% return, guaranteed. Yes, easy, thank you very much. Let's look at that custody fee as well, because I think it's too high, but we can work with that. So what happened with this company? It has an asset, but it's no longer an equity asset, it is a portfolio of financial assets. Company in the UAE? Yes. Does the company generate income? You would hope, 7%, he promised me. So yes. Now, where is it here? It is there under holding company business. Now, unlike the previous one, it is not a pure equity holding anymore. It has become a completely different animal that requires a separate set of skill to generate its income. So in that case, you will actually need a higher level of substance as opposed to a pure equity holding. But relax, you can outsource that to an independent asset manager. But that's to make you think that a holding has started in its life out of scope, then in scope with reduced requirement, then in scope with full-on requirements, and then because the shareholder decides to reinvest all their cash, they say, thank you, give me my bag of money, and they reinvest, I don't know, they want to build a mushroom factory, and they will do that, they will invest everything, and for the first year generate no money at all. Guess what? Qualification? UAE company? Yes. Income? None. So you are out of scope again. And that's the evolution of a company, thus the importance of every year conducting an ESR report and adjusting depending on your circumstances. Sorry to tell you, but there are some fines going with that. They are not as heavy as other jurisdictions for now, because I think the UAE has a tolerance for first-time offenders, it seems. But the repeated one are quite nasty. But that's not the problem. Everyone can pay 10,000 dirhams fine. Ultimately, you risk a deregistration if you do not comply over time. That's a problem. But you know what people will get more excited about? this. If you do not comply, the data on the company will go straight to the countries of the controllers. That's fun. And that actually means if you are, I don't know, a French shareholder in a company here that doesn't have enough substance, it signals to the French tax authorities, hey, by the way, we in the UAE think that this company doesn't have enough substance here. You may want to look into that from a French perspective because there might be some risk that someone is operating his company from his yacht in Cannes, perhaps. And this is the risk, the exchange of information related to non-compliance. Jonathan Menou.
Just one question, but if this French guy has a UAE visa?
So my read, and I don't have a definitive read on that, but maybe Peter, you have the answer. My read is the visa in this doesn't matter. I think they will share at large, and I think they will share per nationality.
It's not a question of residency.
Full-time residency here, not in France at all.
Yes.
So hey, open question, brother. We don't know. If someone has the answer, I take it now. Yeah. No, I know. But my point is, there is a risk. Are you willing to take the risk of the government applying a policy and not changing it? We're in the UAE.
Of course, yes.
Of course. But this is a tricky one, huh? You see, there is a big risk in non-complying. Hey, comply and you do not have to answer this question. That's good. That's the good thing. So let's come back to my shipping company, because what we have established is one needs to do a report. One needs to allocate, okay, am I in or am I out? And if I'm in, I should go slightly deeper. I should go granular, and I should check, do I have a gap analysis? Is there something that I'm missing? And if we have this here, if you look at the company that has to be directed in managing the UAE, in my example here, there is a manager, but he has not exactly been very diligent in doing minutes of meetings. In that case, he's only partially compliant. And he can do one more step in, okay, now we'll start doing minutes of meetings properly. I'll do them when I'm in the UAE. I will keep these minutes on the ground, on company premises with the outsourced providers, and then I become compliant. That's a gap analysis and a remediation. Here, in terms of infrastructure, we have found that given and that's a live case, by the way, we have found that based on the turnover, they didn't have enough on the ground. So the recommendation was to actually take one more staff member to outsource some of the function, and they really needed to do that because otherwise they would be falling as non-compliant. And for the third one, SIGA, actually the manager was doing a great job. He was really running the operation from here. He was sending all the invoices from here, all the offers. So there they were fully compliant. It's just that the poor chap was a little bit overworked, and he was very happy to have some additional staff because the turnover was going up. So the message here is that whatever you do, you need to check this gap analysis and see, should I do something? And the good news is you can both recruit, in which case we can help you, but more importantly, you can outsource. And you need to outsource to a domestically based, preferably full service platform. I don't know, but I actually know one good one, which goes with a pink thing. It's quite good. So that's what you can do. And how do you do that? You can outsource direct and management here. And that can be provision of non-resident directors, provision of corporate services providing services. So this you can have. Same with infrastructure. You can have an employee part-time outsourced to you on a second-man basis if you do not need a full-time employee. That's what you have in a financial firm with a compliance officer. No problem at all. You need expenditure. That means your contract with your service provider needs to provide for you being able to use their premises as you need, typically to hold board meetings, etc., etc. So there, you can outsource exactly the same way. Have you ever heard of outsource HR? This is a service that many companies will now avail, not only because they need it, but also because it helps them with substance. Retain an auditor, even if your free zone does not request you for one today, but it will change in the course of the year. And even for SIGA, you can outsource it. Some accountancy team have special competences in trading, in shipping, etc. So you can outsource to them. You can outsource some of the operations to other people. Virtual CFO, also something that really creates substance here. So what should you take home? One, I hope that I've passed the message that while the law is coming, is here, and is here to stay, it not only creates obligation on those companies that were particularly targeted by the law, but on everyone else. If you fall under the law, you will need to file and file suitable data. If you're out of the scope of law, you need to have your internal documents in order to be able to notify the government that I'm out of scope, this is my financial year, see you next year with an update on my situation, whether I'm in or out. So we call that an ESR diagnostic, but do that now. Check your company's business. Qualify it. Am I in or am I out? Identify whether there is any gaps in what you do. And trust me on this, every company has some. We've done what? Maybe 100 or 120 of these diagnostics now. It's good fun. And it's great to discuss with clients because you really give them added value. And where required, add some resources. Remember, this started first in April 2019. That's a long time ago. So you need to go back to that time. Where's I compliant there? Am I compliant today? What do I need to do to be compliant tomorrow and every year after that? Take appropriate resources in. And then don't forget to file. It will start sometimes in 2020. To whom you ask? I don't know yet. No one does. We actually have seen already some draft, but it will pretty much go to your registrar who will relay that to the central authority. No rocket science there, nothing surprising, but this is yet to be announced. We are entrepreneurs at MHQ. We love to do business, but we also love to support businesses. And our way of supporting entrepreneurs is to have them focus on what they do best. And what they do best is running their business and not having to bother with cumbersome administration. So this is pretty much all we do at the firm, and then some. But all these qualify as outsourced services for purpose of ESR. So it's your choice, really. You can end up like this under a pile of paper, or you can call us because you know we have you covered. Thank you very much.